It's about that time of day again. My name is Joseph. Thursday evening, September 20th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, I'm going to cover crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening with oil, crude is bearish with a wedge that's almost completed. And that narrow range tells me I've got to look for selling opportunities after a deep correction off these lows for tomorrow morning. The S&P is bullish with a spike and channel pattern tonight, and that tells me to look for buying opportunities, but I'm waiting for a deep pullback, and I've got my eyes on a reversal line tomorrow morning. Nasdaq is bullish with a spike and wedge tonight, and that tells me to look for buying opportunities down at the base of that wedge tomorrow morning. Gold is bullish with a flat channel, and that tells me that deep pullbacks will be best the buying opportunities. So I'm watching that 2-try rule on the gold. Gold's got a great chart for you, so make sure you stick around for that on tonight's video. And of course, we can't forget about the euro. We'll wrap tonight on the euro. Euro is bullish with a spike in channel, and that tells me to look for buying opportunities down at the low of that channel. Well, we survived quad witching week, almost survived quad witching week. We're headed into quad witching Friday tomorrow morning. That means anything is possible, and of course, as always, I've got a solid plan of attack with plenty of reliable trading opportunities setting up for tomorrow's session. But before we break this down and put the plan together for Friday's quad witching session, I do need to remind you, if you're here watching me tonight on my YouTube channel, you can find a detailed description of this entire trading strategy written out in text right here on the blog at Sideways Markets. Just scroll down right below this video. And again, if you're on YouTube right now, I'll leave the link in the description of the YouTube video. Also, if you have any questions about anything covered in this video tonight, please remember to post those questions in the comment section below. And if you like what you see in the video tonight, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And don't forget, if you really want to stay in tune with everything we do here at School of Trade, want to make sure you never miss another great video, head over here to the blog at sidewaysmarkets.com, and in the upper left-hand corner, right, join our mailing list. That mailing list, give me your name and your email address, and I'll shoot you an email every time we publish something new. If you're on social media, stock Twitch, Twitter, Facebook, LinkedIn, whatever your favorite flavor of choice, you can follow me on social for lots of chart updates throughout the week. And don't forget, if you want to grab all the charts from tonight's video, right? If you're not going to be with me tomorrow in the trade room and you still want to get all the great benefits of all this analysis, you can download all the charts in the lower left-hand corner. And then in the right-hand corner here, upper right-hand corner, if you're not a member here at schooloftrade.com and you'd like to grab a free pass, right? Kind of a free pass into our trade room, grab that free pass in the upper right-hand corner. I'll teach you more about the strategy, show you what it feels like to be a client and all that good stuff. So grab that free pass in the upper right-hand corner. If you have any questions, don't forget, post those questions in the comment section below. And usually this live support is turned on, right? And you can use that. Apparently it's offline, and I'll have to restart the support system when I get done this video. Let's jump right in. Moving forward here. Getting ready for tomorrow. Tomorrow's Friday the 21st. What's the schedule here for tomorrow? Nothing. We got nothing tomorrow. Well, I shouldn't say nothing. We've got all 4 asset classes expiring tomorrow. We got futures contracts expiring tomorrow. We got options contracts expiring tomorrow. We got options on futures, right, expiring tomorrow. So all hell breaks loose at the closing bell tomorrow. And of course, that means we are going into the end of quad witching, which always means, as we talked about throughout this week, lots of unexpected runs, right? That's going to be the big theme for tomorrow, right? Is you're going to see the market kind of consolidate and then big runs and then consolidate, big runs. So it's expecting to be a little bit choppy, a little bit chippy tomorrow. So be on the lookout for that personality tomorrow morning. Obviously, we'll be together tomorrow in our trade room at 8 o'clock Eastern time, and we'll navigate through the chaos that is quad witching. Now, I'm not going to lie, tomorrow could be a fantastic session. We've got some great levels we're going to look at tonight, and I think we have some potential real big opportunities tomorrow morning. It may also be a relatively slow session as well, because there is a bit of a, the reputation of quad witching precedes it. People know this tomorrow's session is going to be a little bit of a again kind of a jerky back and forth type of inconsistent price action. At least that's what it usually is, and so that tends to keep people away on quad witching. You know me though, I'm never somebody, you'll never hear me say don't even bother to trade tomorrow, because anyone who tells you that is wasting your time. There's always going to be a couple great opportunities each day, so I'm not going to say don't even trade this tomorrow. I find that to be foolish advice, but just make sure you're aware that if it's not moving well tomorrow, we need to back off because there is a reason for it. Now, with that said, we also have tomorrow, just being a Friday, right? We know we're watching basically two main components, right, on a Friday morning outside of it being quad witching, and that is early in, early out, right? Early in, early out. Fridays are pretty much half days. You want to get your money out of the market in the first few hours of the session. My focus on a Friday morning is always between 8 a.m. and 11 a.m. Eastern time. You're more than welcome to hold trades into the close, but I'll be very, very careful, initiating any new risk after 11 o'clock Eastern time, right? The second component for tomorrow are those prior week levels, right? Those prior week open, high, low, and close, with the big ones being the high, low, and close numbers, right? Those high, low, close levels. Got a couple of those tonight, right? We've got obviously, the E-minis are back to all-time highs right now, and we'll take a look at that in a moment. But we've got some prior week levels on gold, on euro, on crude oil. So a lot of prior week levels. We'll find those in a second as well. So early in, early out tomorrow, and those prior week open, high, low, close levels, those become great targets. They become great support and resistance, and we'll look to use those tomorrow as well. So Friday morning, early in, early out, prior week open, high, low, close levels. And again, keep your eyes open. We're going to see a couple good opportunities tomorrow. And remember, that's kind of the big benefit of being with me in my trade room every day, is I'm going to make sure you know where the best opportunities are going to be, and I'll make sure you use that trader's mindset to be ready, willing, and able. Let's jump right in and get ready for tomorrow's trading session. And again, everything I covered tonight, we're going to trade it together tomorrow in our trade room, opening up at 8 o'clock Eastern time. We got crude oil, S&P, Nasdaq, gold, and we'll wrap up tonight on the euro. Starting off on the crude tonight, crude is bearish with a channel, a wedge, and a measured move on the chart this evening. The wedge tells me momentum is on the side of the bears. You'll notice we have this kind of wedging, right, movement here right now. That wedge, right, tells me momentum is on the side of the bears, and I want to sell at resistance levels, right? Momentum is bearish, and I want to sell at resistance. Now, the wedge, right, is getting narrower. Look at how narrow this wedge is getting right here. It's going to be really difficult to find anyone who's willing to trade for only a couple ticks, right? Because you got the high, you get the low, you're back at that round. I mean, it's very difficult to justify trading here because there's just such a small, little narrow range. What that tells me is usually when the range gets really small like this, we typically see a big correction, right? We typically see a big correction. And that correction is just simply there to allow sellers, right, to get into something with a lot more open space, right, for them to cash some big paychecks, right, for that move back down to finish off that wedge. And the wedge, of course, right, where those two lines come together, that becomes the target, right? So the wedge tells me we're bearish, we want to sell high, we're expecting to see some sort of correction here, right? Let's find some levels of resistance up here that we can use. This is why this channel is so important. So we draw out these trend line, right? We draw the trend line off these lows. I bring it up, you can see how that midline is really fitting like a glove. So this channel could be all we really need tomorrow, right? And again, you've got that up and back down from there. But if we take that channel and we stretch it out a little bit and put it up at this high, all of a sudden now, this really sets up here as a larger channel, Again, this will be resistance up here, right? And then, of course, we're expecting that correction, right? So that channel high just might be what the doctor ordered for levels of resistance. You know, in all reality, right, the channel gives me the opportunity to sell off the high after that wedge correction and, of course, that measured move, 1, 2, 3, or perhaps, right, 1, 2, and if we bounce, right, 3, right, we're looking at that target down around that $70, right, a barrel. Now, if this thing really keeps going here tomorrow, I want you to look a little bit further down because there's that prior week close. Right, we heard some news headlines out of OPEC, well, out of the White House about OPEC, and that prior week close, 68.75. That's where last week closed, and it wouldn't be a huge surprise if we finish the week this week right back where we did last week. So keep your eyes on that if we do, right, if this thing turns into a bloodbath tomorrow, right? That's what we're looking for tomorrow. So we know we're bearish. We know we want to sell. We want to sell at resistance. If we pull back to resistance here right now, you'll notice one thing. We are going to be above the moving average. So let's put this plan together. As we pull back to resistance, what are some of the opportunities I'm going to get to sell this market? Well, the first one I can find here is going to look a lot like this back here, right? Where we get that pullback up. The buyers try to buy the pullback, and when they fail, we drop back down, right? We call this a two-try pullback pattern, two-try failure pattern, right? So we'll get a strong move up. That's the first try for the buyers. We'll then look for those buyers because, you know, a lot of times you get back above that moving average, and you're going to see buyers sort of buy this pullback, right? They're going to think the market's bullish, right? And they're going to try to buy that pullback. They try to buy the pullback now, but remember, the momentum is down. Momentum is not bullish. So the odds of this pullback holding and running higher aren't very good, right? I'm an odds guy. You should be too, or gal, right? You too should be interested in sticking with the probabilities, sticking with the odds. The odds of this pullback reversing this market are about 20%. Right? It's a much better odd, right, for us to sell this thing short. And how do we sell it short? Well, I'm going to think about if I was a buyer, where would my stops be? My stops would be right below that low, and that becomes a nice jumping point here now for those bears as we sell into it. So the first selling opportunity, and this could happen just barely above that channel, right? Or this could happen all the way up top here, right? I mean, this could easily be a bigger move. We see that one try, we see that two try. The buyers come in, they try to buy that pullback. We know where their stops are now, and we're looking to sell into those stops for our first, right, opportunity to sell short. Now from there, where do we go from there? Do we chase after this thing here? No, right? We don't want to chase after moves after that failure. We want to look for what happens here. We go up, the buyers fail, crashing back down. I want to sell that pullback, right? Sell that pullback. That's the next opportunity. And what I like to do is I like to go out and grab a low there, bring up a new hidden channel, and we can look for that hidden channel pullback for that move back down. So as we go higher here, we're looking for that two-try failure pattern, right, and that hidden channel pullback pattern, right? Those are the two patterns that I'm hunting for tomorrow if we get that pullback. Now, two-try failures, hidden channels, we're going to talk about trap patterns, strength patterns. We're going to cover a lot more patterns in tonight's video, and I realize that a lot of this terminology might be a little bit more than you know already, right? Which is not a bad thing. They're easy to learn, but I want to make it easier for you to really get the most out of this nightly newsletter. And to do that, in the upper right-hand corner, you'll see a little pop-up here, right? I'll give you a free trading class in that upper right-hand corner. If you're dedicated to your success, right, and you're willing to put the effort in, right, I'd be happy to teach you more about this strategy for free $99. It's a great bargain for you. So grab that free trading class in the upper right-hand corner. I'll also link it up in the description of this video if you decide later on in the process, or if you're not on our YouTube channel right now, right, you can jump into that, right, that video as well. All right, so grab that free trading course, learn more about all these patterns. You will not be disappointed. Now, what if we go lower here, right? What happens if we keep going lower? If we keep going lower, if we don't pull back, right? What if we keep going lower here? If we keep going lower at this point now, not much changes. We still have a very big problem with selling low. We're still waiting for that up to try failure into a bearish move lower, and then of course that hidden channel pullback, right, to finish that move. Something you want to keep your eyes on tomorrow as well, because you got that big round number, right, is going to be a possible trading range, right? A trading range. Now, trading ranges, right, again, tomorrow's a Friday, and so it may be relatively quiet tomorrow. If we start seeing double bottoms in this bear market, that tells me we have a range-bound market. In that case, we look for what we call the two-try rule. I want to see a potential counter trend breakout. That's one try. Look for that second try, and then we'll look for the bears, right, to come in and sell into that high. So the two-try range failure, right, two-try range failure if we're going sideways here for tomorrow. Last but not least, how do we reverse tomorrow? What does a reversal look like? Reversals require us to get proof. We need to get that 1, 2, 3 reversal. Remember, most reversals fail, right? Most reversals fail. So it's important that we see proof of a reversal, then we can trade in the new direction. So what does a reversal look like? A reversal would look something like that, but it would hold that pullback, right? Strong move up, pull back to the moving average, strong move through, right? So we have to see first a strong move up. But a strong move up does not give us a bear trend. They have to hold that pullback now, right, and run. Remember, if they can't hold that pullback, what's going to happen? Guys like me and soon, right, and soon like you will be selling right into that failure, right? That'll be the failure into hidden channel pullback, right? Make sense with me here? Okay. So if they can hold that pullback though, if they can hold that pullback now and run, and again, you'll feel it. That momentum will shift, right? The sellers will walk away. The buyers will take control. You'll feel it. It'll rush higher, right? You'll feel it. Once that happens, I'm not going to chase after it. I'm going to mark up that prior swing. I'm going to go out and find my new channel, and we're looking to buy the pullback right around that area for a move back up to retest the high. And this could definitely happen because in all reality, we get a double top, right? This could start to, range out here, and we could be looking at this going right back to retest that high here. Once we get back to that high, though, be very careful buying up here. Wait to see follow through. If we can see follow through that high, then we can keep buying it, right? But don't be surprised if we get that strength, pullback strength, that 1, 2, 3 reversal. We get the pullback, we run back up, and then we chop, right? Be very careful up there being a buyer at those highs. We'll know more about that plan once we see more details in tomorrow's session. Let's keep going here. Let's keep going because we've got a lot more to cover here tonight. We're just getting warmed up. S&P is bullish with a spike in channel, a possible range, a reversal line, right, and a measured move on the chart tonight. The spike in channel, right, spike up. That's big spike. What does that spike tells us? That tells me momentum is clearly bullish, and I should focus on buying at support levels. Now, look what else we have. We have a very lazy channel. What does that channel tell me? Well, it tells me there isn't very deep pullbacks. I mean, look at that. We barely have gone below that moving average. Now, guys, the experienced traders of the world, they know the best trades usually come off deep pullbacks because then you get the opportunity to get that kind of snap back up to retest the high. So the spike tells me that momentum is clearly bullish. The channel, though, I think is the bigger clue. There's been almost zero pullback, which means we should expect to see some sort of pullback here, if not just because the buyers have to be taking profit here at some point, and there'll be all those experienced traders with their big trade accounts flush with cash waiting to buy it and go right back up to retest that high. Now, you can also see, and again, we know we're bullish. We know we want to buy at support, right? We know we're looking for a relatively deep pullback. What other support levels can I use right now? How about a reversal line here? Bingo, 33. You know me, I love using reversal lines, right? Reversal lines are very simple. We take those, right, prior those prior swing highs, we use them as support, right? And when they line up nicely with the low of a channel, boy, oh boy, right, are they reliable levels of confluence, right? Those multiple levels of support piling up, right? So I love this. I love that reversal line. That reversal line is still waiting to be used. I also, if we really want to get crazy, or maybe not that crazy, but if it takes a while to pull back, right, how about this trend line as well? You know, I got kind of like a hidden channel going on right now, right? Drawing that trend line here, bring it in now off that low, right? Kind of like a hidden channel there. So this whole area down here really is of interest to me. We want to buy the pullback, right? Want to buy the pullback. And again, in the bull market, looking to incorporate levels of support. Where's our target? Our target is definitely going to be that measured move here, right? That measured move up there at 29, right, 45. Remember, we're at all-time highs right now, right? We're back to all-time highs. So it's very difficult to find projections or targets unless we can use symmetry, or the easiest way to do it is just wait for the pullback, because then you know exactly where that target is, right back up to retest the high. Right? When we're at all-time highs, markets get emotional, right? They have a different psychology because there's what? FOMO, the fear of missing out. People do crazy things, right, when markets are at all-time highs. So we got that strong move up. We're looking for a deep pullback. In all reality, there's potential this market may go sideways tomorrow, and we may have to wait for that deep pullback. You know, remember, whenever we get a market that goes this far, right? I mean, look at that. That's a big move for the S&P. Whenever we get a market that goes that far in such a short period of time, it's almost it's I don't want to say guarantee, but it's a high probability the following day goes sideways. So we'll definitely be keeping an eye out for a possible range here as well. So let's play all the cards here. What if it pulls back? What if it keeps going higher? What if it goes sideways here? If it pulls back, then I think that reversal line is definitely going to be a key here. I definitely want to get as far back as at least that 34, 29, 34 here. At least get below that prior swing. Get me into that little wick territory down there. But definitely we pull back, though, we're going to be below that moving average, right? If I zoom in a little bit more here, make sure to show you guys the big picture here. But if we pull back, right, below that range, we're going to be below the moving average, right? And that, of course, puts me in the ballpark now for a 2-try seller failure. 1 try, 2 try, right? A failure pattern. That failure pattern will allow me now, right, to buy going back up to retest the high. Okay, that's the first option. I can also, of course, look for that failure into hidden channel pullback pattern, right? Another one of my favorites. You can oftentimes combine, right, all of those levels there, right, for some rock solid support. So look for that pullback, right, around that support level there. So that's if the price pulls back, right? So pulls back, 1 try, 2 try, back up. And guys, I mean, this pretty much goes for everything unless we just nosedive, right? I mean, if it just, let's say that we just nosedive in the short term and we end up all the way down near the lows of this battle zone. Who knows, right? Trump could tweet something, right? The ECB could say, I mean, who knows, right? There's so many possibilities where this thing could just jackknife, right, going lower. If it does jackknife lower, right, then all you want to do is look for a little bit more proof. What I'll do is I'll do this. I'll wait for that seller failure, go up, and buy that pullback, right? So if we do get that deep, like we're talking nosedive, right? If we get that nosedive down into that trend line, all the way down to that battle zone, right? Then we want to wait for that momentum turn and ride it back higher. But short-term pullbacks, small pullbacks, 1 try, 2 try, back up in. That's my plan there for tomorrow. Again, if we go sideways here, how would you know if we go sideways? If we pull back off this high, right? If we pull back off this high once the market opens up here in 10, 15 minutes, we pull back off that high, that now tells us we're now range bound. If we're range bound, we cannot buy those breakouts, right? Very, very difficult. It's one of the big clues of range. We want to buy those breakouts. We want to come down, 1 try, 2 try, get those bears to try twice, right? And then look for that buy going back up into that range. And again, you'll notice in this chart, I'm talking a lot about these two try failures, using failure patterns. Guys, I've got a full chapter on failure patterns, the two try rule, and literally hundreds of examples of this pattern in that free trading course. It's linked up in the description. There's also the information icon in the upper right hand corner, right? So grab that as well, and you're going to love, right, that free trading course. Now, what if price keeps going higher? Right? If we keep going higher here, if we keep going higher, what I'll do is I'll get rid of this channel and we'll look at it as probably a new spike in channel, right? So if we do keep going higher here, I'm going to look for a new spike in channel. And again, not much changes. We're still looking for, right, if this thing goes higher here, we're still looking for that pullback, get below that moving average, right, failure, and run back up. We've gone so far today that it's just tough to imagine this market's going to keep on going without giving us some deep pullback, and you want to save some of your cash, right, for that deep pullback, because it has the potential to make your entire day on a day that may not have that many quality opportunities because it's quadruple witching. Last but not least, how do we reverse? Now, this is a really important one because with all this bullish momentum today, a strong move lower is not going to be nearly enough, right, to get us wanting to sell. We're going to have to see that strong move lower, that pull back to the moving average, and we need to see literally, right, the you know what hit the fan, right? It's got to fall apart, right, off of that high. And I know this isn't what you want to hear, right? I know you want me to give you some special secret about how to predict the reversal, right? And I'll tell you right now, order flow ain't going to do it. Momentum indicators ain't going to do it. I don't care how fancy your computer is, how many tools you've got, how many time frames you got. Predicting reversals are virtually impossible because of one thing: momentum, right? Put your car into neutral. Well, actually, don't do this. Take your car to a parking lot, right, with no other cars in there. Put it in neutral and start pushing it. It takes a little bit of time to get the car going, right? But sure enough, once you get that car moving, right, now run in front of the car and now try to stop that car. Probably, well, actually, you know what? Let's not do that last step, all right? I don't want to get any pictures on my Twitter about you guys getting run over by your own cars in neutral. So don't run in front of the car, but imagine, right? Imagine yourself trying to stop that car, right? It's going to be difficult. That momentum moving forward when you put that car in neutral is going to make it very difficult to stop that car. That same momentum is in play in the financial markets. So all the signals in the world off all momentum and tape reading and all kinds of crap, right, that clutters up our charts these days, that's not going to be enough. The only way to really guarantee you've got a market reversing is seeing that 1, 2, 3, right? That strong move off. And I know it's tough because watching the market drop without you is never a fun thing. But remember, they call it fishing, not catching. What do I mean by that? You know, it's the old fishing story, right? They call it fishing, not catching, right? We are here looking for high probability opportunities. If I try to sell that first pullback, that is not a reliable quality opportunity. If I wait now, mark up levels of resistance, now the momentum is on my side, right? That is a high quality opportunity. And if we get it, we'll take it. But again, we're not in the business of predicting reversals, not because the indicators don't work, right? But because of that momentum, right? And be careful out there. Please don't run yourself over with your car in neutral. Let's keep going. From the S&P now, let's go back to another E-mini here, over to the Nasdaq. Nasdaq is bullish with a spike and range, a bull wedge, and a measured move on the chart tonight. The spike higher. You guys probably know the story of this one, right? That strong spike higher here barely pulled back to the moving average. That tells me bulls clearly have control with strong momentum, and I should look for buying opportunities at support levels. Now, I can see two easy support levels. First, I've got this wedge, right? Now, we talked about wedges. What do wedges mean? Well, once we get into the narrow part of the wedge, what usually happens? A pullback. Where do we usually go? We usually go to the base of the wedge, right? The base of that wedge is usually where it pulls back to. So that's a level of support, right? Down around this 75, 84.5 area, right? The trading range, which, and again, you can see it could be a wedge, it could be a range. It looks more like a wedge, but anytime we see double tops in a bull market, what do we know? Trading range, right? Take that range, copy and paste it up, that gives me resistance. Copy and paste it down, that gives me support. So 66, we'll call it, right? That's a level of support. So we've got, again, a strong spike higher. That tells me stick to the buy side, right? Don't go trying to call reversals or tops. Okay, stick to buying at support. Where's my support level? Base of the channel. And again, take the size of that range, copy and paste it down. That creates support as we go. Now, it's looking like a range. So what we're looking for here is the 2-try rule, right? We want to see that move lower. That's 1 try. Pull back to that moving average. That's going to be the setup for a 2nd try. 2 tries. Once we see those bears try twice, now we know the minute this market starts going higher here now, what's going to happen? All those bears who got some momentum cross or some order flow signal that they're going to reverse this sucker, right? Again, not a reliable trade. Those sellers now, once this thing starts to push higher here, they're going to bail, and this market will usually snap right back up to retest that high, right? The target, of course, being back up to retest the high. And then what you can do is you can take the pendulum swing, right? Measure the amount of the move below the range, measure that to the amount of the move above the range. Well, and look what we have there, right? Prior week high. Remember, those prior week levels are sticky magnets on a Friday morning, right? So that's the plan if this market pulls back. If we go sideways here, there's really not much difference, right? If we keep going sideways here, there's not much difference. 1 try, 2 try, back up we go. What if we go higher here? If we go higher here, we got a whole hell of a lot of stuff up here, right? Measured moves up there as resistance, right? Prior week highs up there as resistance. I've got that range expansion up there at resistance. Now we're bullish, right? So is my plan to buy at resistance? No, the plan is to buy at support. So if we go higher here, I've got to basically one of 2 things. I have to either see a tremendous amount of momentum through the high, right? Then I can use that prior week high as a pullback area, right, to keep buying. But we're talking, I got to get a strong move up here, get that moving average to get above that prior week high, and then I can buy it, right, as support. Or we have to jump up and then spend a good amount of time up here going sideways to prove to us that we have enough interest to withstand, right, to withhold that move higher. Then we can look for that 2 try, right, the 2 try failure, and we can buy the low of that range. Just be aware though, right? Do not try to buy that breakout, because you could be buying the high, literally the weekly high, and it could easily collapse back down with you. Now, speaking of collapse, what does it take for the market to reverse? Strength, pull back to the moving average, and then what? Just a test of the moving average? No, it's going to follow through, right? Now, you'll notice I have this trend line coming up, right? This sneaky little guy down here, right? There's definitely a trend line coming up off of these lows, right? So we got to be careful as we sell off here, or as we potentially sell off, strength, pullback, strength, right? As we go, you're going to want to make sure you get short before that trend line kicks in, right? Because then what you can do is you can take your profit target off at the trend line and then leave the runner, right? Take a big chunk off the trend line, leave the runner down to that low at 14, right? If we get, again, it's unlikely, but it's possible, right? If this thing just bolts lower, make sure we don't sell into that trend line. Use it as resistance on the opposite side, right? And that will be your most reliable, right? Remember, being a trader is all about reliability. I would always gladly trade a little bit of profit for a couple percentage points on my winning ratios, right? And if you disagree on that, right, you might want to do the math, right? Would you trade a little bit of profit, right, for overall a higher winning percentage? Remember, higher winning percentages mean, right, less commission paid, less drawdown, right, more confidence, and confidence in your strategy, right? That's the secret, because when you're confident in your patterns, you trade more, right? You can trade a lot more frequently as well. So I would gladly use a lot more reliable strategy than trying to trade more often. You may disagree with me on that, but I would encourage you to take out your calculator and do the math, because you're going to make more money with more probability. Less frequent trades, higher probability results. All right, let's keep going. So that's the plan there on the Nasdaq here for tomorrow, and then over back to our commodities. We got gold, and of course we'll wrap up tonight on the euro. The gold here. Gold is bullish with a trading range, a channel, and a measured move on the chart tonight. The trading range, which I think is probably the most important clue here, there's a bull move right into that trading range. Right? There's a bull bias to it. Now, anytime you have a bull move into a trading range, and how do I know it's a range? Because we have double tops, right, in a bull market. So that tells me there's a range right there. Anytime we see a bull market into a trend, we know we're looking for buying opportunities using the 1 try, 2 try failure pattern, right, off the low of that range. So we want to be a buyer. We want to buy below the low of that range. I would love to find some levels of support, right, that I could possibly use. I can take that trading range, copy and paste it up. That creates resistance. Copy and paste it down. That creates support. I like that support area at 1208.1. That makes for excellent support. And then how about this? Why don't we take these 3 highs, line those up, bring them down to those 3 lows, and well, doesn't that look like a good level of support too, right? So those are all support levels, right? Those are all support levels here that can be used. So that creates our battle zone here for tomorrow's quad witching session. Now, this channel is quite the important, right? Quite the important channel. In fact, if you measure the pullbacks, right, they're relatively symmetrical. So we may see a relatively deep pullback here. The big clue here is, right, the channel's almost flat. And that tells me the trend is bullish, but not very strong, right? This is not a very strong trend, right? A strong trend will have a channel that looks like this, right? It'll be narrow, it'll be almost vertical, right? The bottom line is that buyers can get aggressive on those channels because sellers can't make any money with those channels. If the channel is wider and flat, well then guess what? Sellers can make money in this, right? As a seller, I could just simply sell high, right, and take my profit target, right, at that low, and I can make that difference right there, right? That's a pretty good risk-reward ratio if you're a seller. See that? You can't do that when the trend is really strong, right? A seller doesn't have that much profit potential if it's a narrow, almost vertical channel here. So that channel tells me that we're gonna probably get some deep pullbacks, right? And those deep pullbacks, you know, they'll probably go like something like this, right? Deep pullback, back to the moving average. Bears try to sell, right? There's your 1 try, 2 try, and we can look for that buy going back up. So that's what you're thinking tomorrow, right? Don't be spooked by this deep pullback. Let it pull back to the moving average. Let those bears try twice. Look for that jump off of that low. That'll be your first opportunity, right? Then we'll go out, we'll grab that new hidden channel. As long as we're not buying into the high of that range, right? That's the key. We want to buy the high of that range. We'll look for that run, right, back up to retest the high. Now, if we do get that, right, pull back into that, again, it'll be the 2 try failure. It'll be the hidden channel pullback pattern. If we get those 2 patterns, and again, you can learn a lot more about these patterns inside of that free trading class. If we get those though, where are my targets? Well, again, if we get the pullback, right, get that pullback, first target is back to the high. Where's my second target going to be? Remember, measure the amount of the move lower, project that to the amount move higher, right, and that becomes your second target, right? We call this the pendulum swing, right? Imagine there's a pendulum right in the middle, right? You drag it down, it swings back up, right? Which reminds me here, right? If it doesn't pull back, right? So if we do pull back, we know 1 try, 2 try, good to go, right? If we don't pull back, if we keep on rolling higher, this is where we're gonna have to wait and see what happens, right? There's literally two things we're looking, well, three things looking for here as we go back to these highs. The first thing would be, do we just run and keep going, right? If we keep going here, right, if we pull back and keep going, well, fine. We know this now becomes a strong move in one direction. Forget about the range. We're looking to buy the pullback and make the run up to that prior week high, right? So if we see this thing jump and it goes through the top of that channel, right? Heck with the channel. Toss the channel out. This now becomes a strong move in one direction. And anytime we see a strong move in one direction, we look left, we find levels of support, we look for two-legged pullbacks, and we buy that pullback. Again, it will most often look like that one try, two try, failure, hidden channel, pullback, and up, that prior week high, because of course tomorrow is a Friday. Another thing you want to keep in mind is if we run higher and go sideways here, right? If we run higher and go sideways, now we're just a bull market in a range, one try, two try, buying back up. Obviously here, if it runs higher and then collapses back down again, right, we're then looking for that buy, one try, two try, and back up right off of that low. So we got you covered here, right? Up, down, sideways, right? We know what a 1, 2, 3 reversal looks like, right? Reversal, strength, pullback, strength. Find that new channel, sell off the high of that channel, right? And at that point, if we do reverse, we have to assume we're trying to get back to that big round number at 1200, right? It's a little bit of a stretch tomorrow, but that could easily be where they're trying to go for, right, tomorrow. Prior week high, though, 1218 is definitely on our radar. We'll see if that comes into fruition, right, tomorrow on the yellow metal. And then last but not least here tonight, wrapping up the week of nightly newsletters with our euro. The euro is bullish with a spike in channel, a possible spike in range, and a reversal line on the chart tonight. The big spike higher, right? This big spike higher, what does that tell me? Yeah, it tells me that momentum is strong, firmly on the side of the bulls. So I'm not thinking about selling. The only thing I'm thinking about selling is getting out of for a profit target. I'm looking at buying right now. Buying where? Buying at support levels, right? And what could we use for a support level? We actually have three big areas here to watch for support. Real quick, if I get these off of here, I can take these highs, bring that down to these lows, and that is a lovely area of support. So that's one area of support. We're also seeing what looks like a market that might want to go range bound. You can see a double top up here. They touched it again. So we may end up pulling back a little bit further, and that low becomes a key level of support. And what I would really love to see is if we could use these prior highs, right? That prior high, remember we call this the reversal line? I'd love to see a nice deep pullback, two try rule, and back up from there. So that's ultimately where we expect, right, these buyers are looking or wanting, right, to get in. That's on the pullback. If price keeps going higher, right, we assume they're hunting for that big round number. So as we pull back, it'll look just like this, guys. One try, two try, failure going higher here. So one try for the bears. Again, you're below the moving average now, right? Second try for the bears. Find their stop losses. We'll go buy those stops, right? Find that new hidden channel, right? We're buying off that hidden channel, right? Coming up to that above that low, right? That is a two try failure into a hidden channel pullback. Easy, simple pattern. And again, you can find more examples and learn more about them right on our free trading class. We've got that, right? So that's the market pulls back. If we end up going sideways up here, doesn't look like it'll be the case, but if we do end up going sideways up here, right, not a lot changes. We're still looking for that one try, two try, right, break back up. Still waiting to buy. If this thing continues here, right, if we continue here, we know they're hunting for that big round number. There's no weekly levels, right, up above us. Not that I recall. Nope, nothing within striking distance. If we do end up punching higher here, right, and just blows higher here like the euro's been doing a lot lately, right, if we do end up punching higher here, right, and we really run higher, what does that tell us? That's a strong move in one direction, And just like we saw a strong move here, one leg, two-legged pullback and a retest of that high. Strong move up, one leg, two-leg, right, and a retest of that high. So we're looking at which way do we go, right? Do we go sideways? Do we go higher? Do we go lower? We're ready. We're ready. All we need now is some personality. All we need now, right, is some movement. And don't forget tomorrow morning, right, quad witching Friday. Like I said, there's going to be a bit of a self-fulfilling prophecy tomorrow. It's going to probably be inconsistent. We should get a handful of good opportunities, but you're going to have to stay patient for them. And remember, patience, discipline, it's all part of that trader's mindset. To be a successful trader, you need strategy, you need skill sets, and you need the right mindset. That's exactly what we do here at School of Trade. Our beginner, intermediate, and advanced classes will teach you the strategy, develop those skills, and give you that mindset every day in our trade room. I've got a great free trial right on the homepage here at schooloftrade.com. I'll put all the links in the description of the video. Call me anytime here. I'll be always happy to answer the phone and answer all your questions. Check out our live support if you want to holler at me via support chat. And as always, man, what a great week it's been. It's been a great third week of the month of September. Hope you guys did well out there. And remember, right, keep your head on straight tomorrow. We'll see you guys tomorrow morning, 8 o'clock Eastern time. My name is Joseph. Be well out there. Be nice to each other, will ya? Be here next time. Adios, amigos. Bye-bye for now.